You know, every time I see a Fed chairman on Capitol Hill, I always think of that Alan Greenspan line where he said, if you're understanding what I'm saying, I'm doing something wrong. I'm paraphrasing there. But a lot of people have interpreted what the central bank chief in this go-round, Jerome Powell, is saying, that rates are going to come down this year, maybe not as soon as some would like, but they are going to come down. That they seem to understand, and right now they seem to like, with the markets all advancing. Thomas Hoenig, who knows this whole process well, the former Kansas City Federal Reserve president, what he thinks of all of that. Thomas, great having you again. That seems to be the signal from the chairman. Do you agree with that? I think you were one of the early ones when the market was getting ahead of itself. Oh, we're going to have half a dozen rate cuts this year. And so you said, no, slow down. But now it's coming to the way you see it.
Well, I think he's said nothing new. I mean, he's been saying this. What we want to see is continued reductions in inflation that's sustainable. And he thinks we've met our peak, that's clear, but he doesn't say when the rate cuts, and he doesn't say how many. And partly that's because he didn't talk about it, but today he should. I know it's in his back of his mind. You know, January saw an uptick in inflation. And as much as you like to say inflation's come down, the core CPI, which is not their favorite, they prefer the personal consumption expenditure index for prices. Right. It has come down more, but it's still 2.8 on core. So he's aware of that. So he does not want to get ahead of himself, because if he eases too soon, he is fearful, and rightfully so, that he might re-spark inflation. So he's very, very coy in terms of his answer. Yes, we peak, perhaps, but we want to see how things go. And that's the answer you would expect. That's what the market is taking as good news, so that he hasn't changed his mind about the direction.
So the trigger, Tom, would be you have to be at 2% inflation, right? You can't be getting close to it. That you get to that level, then a rate cut might be on.
Right. Well, he was pretty clear. He said he doesn't have to get exactly to 2%, but he has to be confident we'll get to 2%. And I think that's why the
inflation number has to have a 2 in front of it, right? It could be 2.3, 4, 5, whatever. So, okay. Well, let me ask you this, Tom, about the political environment. I know the rap is that the Fed doesn't like to move during particularly presidential election years. Actually, history shows just the opposite. It's moved quite often, but not super close to the election day itself. When you were there, were you cognizant of that? And the backdrop for that? Oh, it's an election year. Everything we're going to be is going to be doubly scrutinized. What?
Well, you're certainly aware of it. You certainly have it on your mind. But what you say, and I think what the committee is pretty good at doing, is saying, yes, we're aware of it, but we're not going to let that influence us to the point where we'd make a decision differently than otherwise. We'll think about it carefully, but we will do what we think is best. And I think that does carry through most chairmen and most FOMCs over years. And I was on it for 20 years, and over that period, that's pretty much how we looked at things.
That's amazing. What an incredible run. Thomas Hoenig, thank you very much. A former Kansas City Federal Reserve president. Very good seeing you again, Tom.
Thank you. Thanks for having me.